Is Bitcoin's price topping out yet in what appears to be a cycle top, where price has met resistance precisely at the 2.618 trend-based fib extension? There are 5 phases whales initiate to dump their bags on your moon boy face.
I don't like getting dumped on.
Just stay diamond-handed and don't lose your position since we are back in a bull market.
But isn't it painful to lose your internet coins?
There are studies that show it's more painful to see everything moonshot without a position. But if you're aware of what's happening, you can absorb the pullback better.
This sideways chop doesn't look like much now, but let's zoom into the 1-hour time frame to get a clearer view of this. Let's take a look at the balance of supply and demand. In phase A, demand dominates. Price ascends to a preliminary support and pops up to a buying climax to establish the top of the trading range. The volume shows that effort equals result. But the intense buying becomes exhausted and price pulls back to what's called an automatic reaction to establish the bottom of the trading range. And then exhausted bulls push price up higher to produce a secondary test. Until finally, price drops past the trading range, proving that supply dominates demand to the whales who label this drop as
sign of weakness in phase B.
During phase B, the whales feed their supply to exhaust demand in a long grind. The volume is usually quiet throughout, but during huge whale dumps, the volume increases to reveal effort equals result.
Whoa. Those whales are sneaky, using the element of time and small price moves to get us pumped at the idea we can go higher.
But volume reveals their intentions when they do those quick drops from the top of the trading range.
And then we enter phase C, where there is an upthrust past the trading range to trap bulls and take out short positions. Based on my experience observing the Wykoff schematic, the whales usually summon the Fibonacci fairy and push price close to the 1.618 Fibonacci level.
Let me guess. It's usually on high volume to show that effort equals result.
No, it's usually on low volume to trap the FOMO-induced brave bulls who are buying a breakout of the trading range.
I'm confused.
That's how the whales played their psychological game.
Now we move on to phase D, where supply dominates demand, and we see bear volume increase.
Do you know what happens in phase E?
Well, if there is increasing bear volume in phase E, then the price exits the bottom of the trading range?
Congratulations on understanding the Wykoff law of cause and effect. And that's how the whales dump their bags on your moon boy face.
Personally, I don't think you should try to sell your position to try to time a short-term top, and I'll explain the reasons for that in a second. For those who learned something or were just entertained and want to support this channel, I do have an NFT collection that my partner Artie and I are working on. We're in the middle of finishing up our first comic book issue, and we would love to have you join us on our journey. The reason why that I feel you should hodl your position is that we may be in a 1 to 2 year bull market. In the previous 4-year cycles, we had 3 years up, 1 year down, 3 years up, 1 year down, 3 years up, 1 year down. But in this cycle, we may actually have 1 to 2 years up and 2 to 3 years down. In a worst case scenario of a 4-year cycle where we're only going 1 year up and 3 years down, if you think about it, we're in month 1 out of 12, and there's not much time to ride crypto for a moonshot. I know everyone's thinking that in 2023 we're probably just going to range sideways and accumulate, and finally in 2024 we'll go on a massive bull run. But my idea, I'll go in depth in my idea in a follow-up video. Just subscribe to this channel to keep up to date on my evolving thoughts as the market continues to surprise and challenge everybody.